Well, hello, everyone, and welcome to a session on public country-by-country reporting, which is a hot topic in the world of tax right now, as public CBC becomes mandatory in jurisdictions such as the EU and Australia. I am Mai Trin. I am Head of Tax Risk, Reporting and Reputation at RELX, and a board member of the European Business Tax Forum, the EBTF. Now, earlier in June, the EBTF launched our latest CBC report, which is conducted by PwC. We ask our audience what questions they would like to ask our esteemed panel of tax experts. So I'm thrilled today to be reunited with some members of our fabulous panel to answer your questions and to explore how CBC has evolved from the external value to internal impact, the challenges of providing narrative and storytelling, and the tax transparency trend. So, gentlemen, could we start with a quick introduction from you? Maybe Pascal?
Yes, good morning and hello to everybody. I'm Pascal Saint-Amand. I'm now advising governments and companies on tax policy, and I believe CBCR, when it turns public, is a challenge for companies. Maybe nobody will pay attention, many people will pay attention, and therefore there is a risk to be managed. And the best manner to manage the risk is to develop narratives. So I strongly believe in narratives, even though what we see, or actually because when you look at the Romanian CBCR, you have almost no narrative, which means that companies didn't get it right. They're at risk. Maybe nothing will happen. Maybe something bad will happen.
Fantastic. You mentioned about narrative, and that's definitely very topical. And one of the questions is about that. So we look forward to exploring that later. And then, Tom?
Hello, everyone. My name's Tom Dane. I'm a director at PwC, part of the team that produced the report for the EBTF. But in my day job, I work with a lot of companies as they develop their approach to public CBCR.
That's great. And Dave?
Hi, I'm Dave Murray. I'm the Head of Tax for Policy and Sustainability at the multinational mining group headquartered in London, Anglo American. And we have, as an extractive, been subject to enhanced disclosure rules for many years, and we've been voluntarily publishing our CBCR report for the last few years as well.
Fantastic. I think your insights from the extractive business will be particularly helpful. So let's dive into our first question from the audience, which relates to external value and usefulness to outsiders. So the NGOs were the original group pushing for country-by-country reporting and for it to be made public. A large number of companies, like Dave said, have already published their CBC report for several years, such as those in the extractive sector and the financial services. The question is, have there been meaningful insights drawn from it by the NGOs, activists, and journalists over the years? We also believe that tax authorities are perhaps using CBC more for risk assessment and now for Pillar 2, but they already have access to those CBC reports. So how useful will public country-by-country reporting really be?
Well, maybe as a representative from the extractive industry who have been publishing ours for quite a while, maybe I'll kick off on that. And I think it really depends a lot on the stakeholders and the and the audience. It also depends on whether you're looking at an individual country in isolation or whether you're looking at a whole host of CBC. I think what information you can draw from the CBCs. I mean, we have historically published quite a lot of information voluntarily on our cash tax payments and other economic contributions we make. We do a big report every year with a lot of narrative around our tax governance, our approach to risk management, the tax payments we make split by major countries of operation, and we publish our CBC as an appendix to that. I would say we've not received very many direct questions on specific numbers within the CBC report. There have been one or two, but for the most part, we haven't received a whole host of questions. That doesn't mean that we haven't got credit or interest in it, though. I mean, we see a lot of hits on the website for people that are reviewing the information on there. Maybe they're getting what they need from it. Maybe they're waiting for more comparators to come along. I think what is helpful is exactly as Pascal said, the narrative piece. If you put the data out there without any context, without any additional information, it does invite questions. I think GRI 207 and the requirement within that to articulate what the reasons are where the tax rate differs from the statutory tax rate in the jurisdiction you're operating in is quite helpful. Although when you have such a huge list of countries and a huge list of data points, I think sometimes you have to come up with sort of standardized points to explain different tax rate differentials. So I think it can still invite questions. I think what will be more useful and interesting is when it's more widespread and people can look at the data of lots of different companies and maybe draw conclusions that they couldn't have drawn at a sort of statistical level or a system-wide level as well. So I think the other good reason for doing it is because people have been asking for it, right? And the fact that that the public interest piece is there, that people want to see it. We can talk till we're blue in the face about how the information will be useless to a certain stakeholder, or the information will not give the full picture. But I don't think people were going to stop asking for it until it was provided to them. And I think this allows us to move the discussion on to what the data means rather than where is the data.
And I think we probably won't know how people are going to use it until it's actually out there. But I think while the genesis of a lot of this is around people asking for information on tax, most of the information being disclosed doesn't actually, it's not tax information, it's things like revenues, profits, people. And that information, I think, will be of interest to a much wider audience. And it's a conversation that certainly we've been having with investors, for example, who are really keen to see that level, that information at a country level.
I can only echo what both Dave and Dom have just said. So let's try to put that in perspective and maybe fight prejudices. I mean, country by country reporting is 10-year-old, right? It's even more than that. It was issued with the BEPS report in 2015, so more than 10 years. And I think companies started filing 2017 with the tax administration. So it's old. Tax administrations have got it, and the mood has changed. It's no longer on transparency, ESG. Do you remember ESG, the acronym? Gone, finished. So why do you bother about transparency on good tax behavior in the new world? So that could be the prejudice of a number of companies saying, we've been filing for years, we had no issue, probably tax administrations didn't use it much. And today, this thing belongs to the past. It's no longer relevant today. That's one way of seeing it. And when you look at the reaction of what was published in Romania, maybe that's the right reading. Nobody cares. Okay, that's one option. The other option is actually what has been filed with tax administrations who do understand more or less, hopefully more than less, numbers. So they're able to go and check what they want to check. And it's a private, confidential conversation. Now, what's going to happen beyond Romania? You will have a flow of information that activists and a number of journalists have been waiting for years, actually for a decade. So they are very angry and hungry people who want to use that data, right? And this data, as Tom has just said, is not only about tax. So you have the activists on the one hand, and you also have the people who are the investors, who are investor relation people, who will say, oh my God, we didn't realize that you have the profitability of countries in one country or another. And when you add the European stuff, which is starting now, plus the Australian stuff. Plus, by the way, the Americans were moving there, paradoxically. Then you get a pretty good picture, which should oblige you to reflect on whether you just comply with the law and you disclose what you can, no more than what you can, but then you can bring the different pieces of the puzzle together when you're an observer, or whether you go public. And if you go public, unlike the tax administrations, the consumers of this information will not necessarily be able to really understand what's going on there. And that's where the narrative is absolutely critical to address multi-stakeholder audience. Finally, the level of risk varies, of course. If you are B2C, you have a reputation risk which is massive. And maybe the risk of occurrence is extremely small. It's 1% chance that somebody will catch you. But what is at stake with that risk? If they catch you and you end up on the front page of the Financial Times, the damage will be massive. So if you don't explain the numbers yourself, somebody will do it for you, and the somebody may not be a friend of yours. Finally, beyond the B2C, I mean, B2B, Dave is in the B2B, but mining is under scrutiny of many observers. And that includes the investors, but also the regulators and the non-tax regulators who want to know what you're doing there. Last point is about private companies. Private companies have not issued anything publicly. If you're above 750 million euros of revenue, you will have to go naked in the streets. Now we're after the summer. You may have the summer body, but still not nice if you're not accustomed to do it.
Thank you for the fantastic insights on the external value of the CbC reports. Now, of course, CbC is not just about how outsiders use the information, but also the prospect of the public scrutiny may change behavior inside companies. So that leads to the next question, which is, has the advent of public CBCR meant that tax now really is on the boardroom agenda?
I mean, I would say it would disappoint me if it hadn't already, after the last decade, been on the boardroom agenda in most companies. I mean, the volume of change we've seen in the last decade, you know, BEPS 1 coming in, the Corporate Sustainability Directive coming in, and the impact on tax reporting from that. In the UK, in particular, you know, you've got the corporate criminal offence. You need a senior accounting officer to sign off that you have the right controls in place. I would have thought certainly most large UK companies' tax would be on the board's agenda, even from a risk perspective, because there's so much change in the international system happening. And BEPS 2, of course, is the biggest of the lot from a sort of compliance perspective. It might change the discussion for some companies who were seeing it more as a risk than an opportunity, and that's probably a good thing. But I would have hoped that there weren't many boards out there who weren't already discussing tax already in quite some significant way.
I think what I'm seeing with some of my clients is more traction from the board. And so while tax may well have been on the board agenda, it may have been in a relatively narrow context. I think what we see with public CBCR, and particularly for groups that are looking at their total tax contribution, maybe alongside that, is that leads to a much broader discussion with the board, and particularly when you've got TTC, that maybe aligns with the broader business in a way that the board kind of understands, rather more than some of the detailed tax technical issues. So I've certainly had heads of tax say that through TTC and public CBCR, they get more one-to-one time with their CFO, for example, than they were doing otherwise. And also for groups that are preparing their narrative, the number of people in the business that want to have some say in that, and indeed should have some say on that, is really wide. It touches so many more departments perhaps than tax has done previously. And so again, because of that, I think you see a much wider selection of board members being involved in that discussion.
Yeah, I would again just like to echo what has just been said. But when I advised recently a company on the CBCR, I was struck by how far communication people are from tax people. I mean, they don't speak the same language. The tax people speak numbers. So you have an Excel sheet trying to talk to a Word document. And reconciling that, I mean, you need a software, or you need something. And by the way, that's what I did, putting them in the same room and say, you're not talking about the same thing. One is talking about compliance, the other is talking about fairness. Because the public is about fairness. You say compliance, I have a scheme with a tax haven and all my profit in a tax haven, but my transfer pricing allows me to do that. I'm compliant. And the communication guy will say, sorry, but that doesn't fly. I'm using an extreme example. Of course, things are a bit more nuanced or complex, but bringing tax and communication is the must do to be successful in the release of the public CBCR. And I'm not sure I'm seeing that happening. What you see is the tax guy talking to the CFOs, Tom has just said. Yes, it gives access to the CFO, but that's not the right interlocutor for public CBCR. For public CBCR, you need to go to the public affairs guy and to the communication guy. And at the board, that's what should happen. And instead, at the board, what I'm thinking is happening, or what I saw happening, is you check the box. You've put tax on the agenda. You do the 5 boring minutes on, oh, okay, we've talked about that, done. Not what is needed. What is needed is, can we reconcile our tax planning with public communication? And if you don't anticipate, maybe you will never be on the hook, but if you're on the hook, good luck.
So we've talked about the value of CbC reports to the external world and how inside the companies it's got attention at the very top level. Yet when we see from the first wave of the CbC reports being publicly available in Romania, the observation that there's only 1 out of 77 companies that have published their narrative. So the question that we have from the audience is, why do you think that companies find narrative and storytelling difficult? And do you have any tips that could be useful as people prepare to publish their first CbC report?
I mean, I think the first thing. Oh,
go ahead, Tom.
I mean, I think the first thing that I would say is that for the Romania reports, just to look at what is in those reports is far too narrow a view, because most companies, I think, that are putting narrative out there do it as part of their broader communications, because really that tax narrative needs to sit alongside the broader business narrative. Also, you're very limited in format with the kind of the formal EU CBCR reporting, because there is a template, there's not a lot of space, it's just not really the right place to do it. The other thing I would say, I think, about the Romania one is it's gone ahead of the rest of the EU, and so a lot of the businesses that I'm speaking to are planning on doing more when it reaches the kind of the full EU disclosure, because then there's a much fuller story to tell, rather than maybe just that Romanian piece, which for most businesses probably is not the most crucial part of their operations. So I think we will see a lot more narrative, and working with businesses on that. But as Pascal said, it involves a lot of people, and maybe people who've not been involved in this discussion before, and bringing all of that together takes time. And I think people sometimes underestimate the amount of time that it takes. So again, perhaps not surprisingly, I think people are targeting the full EU timeframe rather than the accelerated Romanian timeframe.
Yeah, and I echo what Tom said. I also wanted to echo what Pascal said in response to the last question. We tax people are typically lawyers and accountants. They are used to managing risks, dealing with compliance, making sure that the law is followed and the right tax is paid. And you will find more progressive tax teams thinking quite hard and long about, the role of incentives, or what does the spirit of the law mean? How might people interpret the law in different ways and interpret our behavior? But broadly, these are not people who are comms experts, and you wouldn't want to fill your tax team with comms experts at the expense of making sure that you were following the rules and paying the right tax following the law in every country you're operating in. So I think it really is, as Pascal said, it's about communication, about getting the right people in the business involved and talking to each other and making sure that you get the right experts in. It's a great opportunity for people in tax to learn a little bit more about that world. But we can't expect them all, and nor would we want them all to be experts in that. We need to work with others.
I believe Tom is right on the fact that Romania is not even a dry run. It was checking the box, you need to do it, but you prepare for the big thing which will be coming. Now, are companies preparing well? That I'm not so sure. I don't see what Tom and David are saying, which is bringing all these different people in the same room, making sure you don't forget somebody. I would bring investor relation guys in the room too, because they've been communicating to market some information on the financial profile of the company, and there you will issue the profitability in France versus Germany if you stay within the European Union. That's a pretty interesting piece of information. Is it consistent with the narrative you've been telling the market? So the big risk for companies to think, oh, that's tax reporting. We report on tax, and we put a table. That's the worst you can do. You issue data that you don't explain. People will try to understand, and they will build stories. Or you try to say, what is this about? The table will say a lot about the company's story, about the company's profile, about the company's values. And that requires some hard thinking from many people at the bottom and also from the board on who are we. And that's true for listed as well as private companies. And for the private companies, you have also the potential spillovers on the families which own these private companies. So all that to say, that maybe nothing will happen. And I think that's the mindset of many business people now, or this belongs to the past. And maybe they're right, we don't know, we'll see. I believe still that you are taking a risk if you think so, which you'd better assess. And the best assessment is to go to the board and say, listen, we've done a few things, we believe we're fine, are you happy for us not to do anything? But you need to describe what is at risk there. And I believe the risk is such as you'd better develop a narrative to explain your numbers and make sure it's consistent with the story you tell the investors, it's consistent with the stories you tell all the other regulators, and it matches the different pieces between the European CBCR, the Australian CBCR, and what you do elsewhere. And it's no longer about ESG, it's just about the integrity of companies being able to say, to tell one story which corresponds to who they are. And if there are questions arising from reading the table, maybe it's the time to bring tax in the boardroom and decide what to do. So that's this thing that we haven't really seen happening yet, which I believe will happen in the year to come. It takes a bit of time for companies to do that. So good luck to them all, and let's look at what's happening.
That's great. Now, the challenge of providing narrative is happening against a backdrop of evolving legislative developments. So that brings me to the last question, which is recently the Council of the European Union adopted the Omnibus package, which for most companies would delay the Corporate Sustainability Reporting Directive reporting for 2 years. Could this impact the willingness of companies to provide narratives for their public CBC? And could this also impact the overall trend on tax transparency? And I wonder whether we could start with you, Pascal, because I know that you need to drop off.
Well, I don't think it's, I know it's not changing the timing for the CBCR reporting. So these are two different questions. Is CBCR reporting, public reporting delayed? No, it is not. And the fact that you would have more time, or maybe it will never happen on CSRD and others, I think doesn't impact the fact that you'd better have a narrative, even more so. The observers will be even more hungry of data and using the data if you find it from tax. So I don't think this has any impact, or if it has, actually, it makes it even more compelling to prepare well for the CBCR.
Yeah, I would agree with that. I mean, it would certainly looks like a very convenient excuse for those businesses that were looking to defer narrative and defer the discussion as something to point to as to why they're not doing it this year, but they're going to do it. They'll welcome the discussion next year or the year after when there's a more comprehensive document being published. I do think that won't stop the questions coming. I mean, I agree with Pascal, and really, the data is going to be out there anyway, and it's much better for it to be out there with narrative and context than without, in my opinion.
Yeah, no, I agree. I don't think it does really change the timetable for what people are doing. Obviously, it doesn't change the literal timetable, but in terms of the optional elements and that narrative piece, I think people will still need to do it in the time. And to be honest, with the ESG rules anyway, there wasn't much in there about tax. Anyway, you had to decide that tax was a material topic. And I think of the 250 reporters that we've reviewed, about 6 so far had that as tax as a material topic. So about 6%, I think about 14 of the 250 had tax as a material topic. Now, as people produce their public CBCR, and maybe as they add their TTC data, policy may change. So we may actually see, because of doing public CBCR, we may end up seeing that more people put tax in as a material topic when they do come to do CSRD. But at the moment, there's very little specifically on tax within CSRD. So again, I think that, as Pascal says, probably means not a lot's going to change from a tax perspective.
Well, thank you so much for contributing to a truly insightful discussion today. To our audience, we hope that our panel has answered all of your questions. If you'd like to know more details, please get in touch with the EBTF, check out our CbC report and our launch event in June. Wish you a fantastic rest of the day.